Today, let us see a new topic, that is loan activities of the bank. What do the banks do with the deposits which they accept from the public? People put extra amount of money which they have in their hands in bank, and they are earning rate of interest. Now, what do the banks do with those deposits? Banks keep only a small proportion of their deposits as cash with themselves. For example, banks in India these days hold about 15% of their deposits as cash. What do the banks do? They keep a small proportion of their deposits, a small amount of their deposits as cash with themselves, and as per the rule nowadays banks are keeping 15%. They are holding about 15% of their deposits as cash. 15 percentage of their deposits they are using as cash. They are depositing as cash. This is kept as provision to pay depositors who might come to withdraw money from the bank on any given day. Now, what is the purpose of keeping a small proportion of the deposits as cash? It is kept for the deposits who might come withdraw the money from the bank on any given day. Since on any particular day, only some of it, many depositors come to withdraw cash, bank is able to manage with this cash. Altogether, all the depositors will not come to withdraw the cash. Only few depositors would come. That's why they are keeping a small proportion of their money as cash. So they are able to give this amount of money, which is with to the people who are coming to withdraw the cash. Banks use the major portion of the deposits to extend loans. Now, what happens to the rest of the money? They are giving as loans. There is a huge demand for loans for various economic activities. So, why people need loans? Need loans for economic activities. Bank make use of the deposits to meet the loan requirements of the people. This way, banks mediate intermediary function. They are doing mediate between those who have surplus funds, that is, those who are having extra amount of money, who are the depositors. They are depositing the money in bank. Surplus means additional funds. They are depositing it in the banks, and those who need the cash, they are getting the money from the bank. So the people who are having a lot of money, they are putting it in bank. Those who do not have money, who want money for doing various activities, are getting funds from the bank. Banks charge a high interest rate on loans than what they offer on deposits. When you take loan, you have to give higher interest rate. And when you are putting your money in bank, you are getting only lower rate of interest. This difference in interest rate is the income of bank. So you could see over here, two people are coming to bank. They are making the deposits with the bank. Some people are coming to take the loans, and afterwards the people are repaying loans with interest, higher rate of interest they have to give. People make withdrawals and they too are getting rate of interest, but it would be low rate of interest. Now, let us see here two different credit situations. Credit can be interpreted in a different way. In our book, credit means loan. In simple words, they have given credit means loan as you are in 10th standard. Large number of transactions in our day-to-day activities involve credit in some form or other. That is, we need money. Sometimes we don't have it in our hand and we have to take money as loan. It refers to an agreement in which the lender applies the borrower with money, goods or services in return for the promise of future payment. So presently you don't have money, you have to borrow money from somebody, and for getting money, you have to reach to an agreement that in future you will pay money. So loan, simple words, it is loan. Now, first credit condition is how credit or how loan can have a positive impact. When you get the loan, how it would be helpful in your business or for doing any activities. This festival season, 2 months from now, and the shoe manufacturer Salim has received an order from a large trader in town for 3,000 pairs of shoes to be delivered in a month's time. To complete production on time, Salim has to hire a few more workers for stitching and pasting work. He has to purchase the raw materials. To meet these expenses, Salim obtains loans from two sources. First, he asks leather supplier to supply leather now and promises to pay him later. Second, he obtains loan in cash from the large trader as advance payment for 1,000 pairs of shoes with a promise to deliver the whole order by the end of the month. At the end of the month, Salim is able to deliver the order, make a good profit, and repay the money that he had borrowed. So here you can see Salim has taken loan. Is in future he has to pay it back. Now, for what purpose he has taken the loan? The festival season, he's a shoe manufacturer. It is a festival season. He got a lump sum order for 3,000 pairs of shoes. He got order. Now, for making 3,000 pairs of shoes, he need laborers who could work for him, and he need raw materials too. So if you need to hire more laborers, you have to be paid with wages, money. And presently, Salim is not having money. And he is getting money from a wholesale trader who is giving him advance payment. And leather he is getting from a leather supplier. That means advance payment for 1,000 pairs of shoes. How he has to supply the shoes? And this as advance payment, he is getting a money of 1,000 pairs. So with that money, he can hire the workers. And leather, raw material also he is getting to make. Afterwards, what happened? Afterwards, Salim got the money. He is producing the good and completing the production, taking it to the market. His sales happen. He is getting profit, and he is able to make a repayment. Then, suppose now second situation, how credit can have a bad impact. Swapna, a small farmer, grows groundnut on her 3 acres of land. She takes a loan from the money lender to meet the expenses of cultivation, hoping that her harvest would help repay the loan. Midway through the season, the crop is hit by pest. The crop fails. Though Sapna sprays her crops with expensive pesticides, makes little difference. She is unable to repay the money lender. The debt grows over the year into a large amount. Next year, Swapna takes a fresh loan for cultivation. It is a normal crop this year, but the earnings are not enough to cover the old loan. She is caught in debt. She has to sell a part of the land to pay off debt. Here, how it can be a negative impact. Here, she is getting a loan from a money lender. She is a small farmer. She has to grow groundnut, but unfortunately, her crop is hit by pest and crop fails. And she is, in order to kill the pests and all, she is using expensive pesticides. Afterwards, after the harvest, as the crop failed, she got only less harvest and it became impossible for her to repay the money lender. And it grows over year into a very large amount because she has to pay high rate of interest. Again, if she wants to do the cultivation, she needs more money. She takes fresh loan for cultivation. And this time too, she expected a bumper harvest, but it was not a bumper harvest, a normal harvest. And it became impossible for her to repay the full loan, the old loan as well as the new loan. And she is caught in debt. Now, why people need credit in rural areas? Mainly rural areas, the economic activity, the important economic activity is agriculture. They need money for crop production. That is, they need money to buy seeds, they need to buy money for buying fertilizers, they need money to buy pesticides, and they have to arrange water, electricity, they need to do the repairing work. There is a minimum structure of 3 to 4 months. So they are only getting a gap of 3 to 4 months. That is at the beginning of the cropping season. They have to take the loan. They will buy all the inputs requirements for agriculture. They will, and after 3 months, they will be getting the harvest. They will sell the crop, and the amount of money which they get after the selling of crop is used to repay the loan. Farmers usually take crop loans at the beginning of the season, repay the loan after the harvest. Repayment of the loan, that is very, very important. Repayment of the loan is crucially dependent on the income of farming. If they get a good harvest, they're able to repay the loan. And if they get a bad harvest, then it will be difficult for them to repay, sometimes unable to repay. In Swapna's case, the failure of crop made the loan repayment impossible. He had to sell part of the land to repay the loan. Credit, instead of helping Swapna improve her earnings, left her worse off. This is an example of what is commonly called debt trap. She is completely trapped in debt. Credit in this case pushes the borrower into a situation from which recovery is painful, very, very difficult, because the loan is getting accumulated. She is unable to repay the loan, old loan plus new loan, then again fresh loans. How will she pay? She is not getting any kind of increase in income. In one situation, credit helps to increase the earnings. Therefore, the person is better off than before. In another situation, because of the crop failure, credit pushes the person into a debt trap. To repay her loan, she has to sell a portion of her land. Unfortunately, the saddest part is that in order to repay her loan, she had to sell a portion. She had 3 acres of land and she had to sell a portion of her land. She is clearly much worse off than before. The credit would be useful or not, therefore, depends on the risks in the situation, whether there is some support in a case of loss. So, two situations, one situation, credit has a positive role. It is helping a person in a positive way, able to earn income. On the other hand, credit is also pushing a person into debt trap. So, a risk is always involved when you take credit. Now, what do you think would happen if all the depositors went to ask for their money at the same time? If all the deposits go to the bank and withdraw the money, what will happen? If all depositors demand their funds simultaneously, the bank might not have enough liquid assets. Liquid assets means the cash money. That is what we call liquid assets to meet all the withdrawal requests. When all depositors of a bank were simultaneously request their money, it could lead to a situation known as bank run. Situation where all the depositors are coming to withdraw the money is known as bank run. A bank run occurs when a large number of customers lose confidence in the stability of a bank and rush to withdraw their deposits in cash. This arises mainly due to rumors that the bank may become insolvent. That means it is capable of paying the money. Sometimes people may spread the rumors that this bank has totally failed, they are not going to pay the money. People will come withdraw the money. This leads to panic among depositors who rush to withdraw their deposit. Large-scale withdrawal causes further panic as it actually increases the likelihood of default. Thus, it becomes a self-fulfilling prophecy. The point that it may cause bankruptcy. Bankruptcy means when a court or a judicial process is declaring a bank is unable to pay the debt. That is what we call bankruptcy. I mean, sometimes banks will not be able to pay the debt, and because they are not having the money to repay the debt. All the depositors came at the same time and they are demanding the deposits back. So as long as they are not getting the money from the borrowers, they are unable to pay the money. So in this situation, court, judicial judicial body may declare them as incompetent to pay the debt. That is what we call bankruptcy. Hopefully you understood the topic. Thank you.